Derivatives trading involves substantial physical loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thank you. Hey, what's wrong with the camera? It's not working. Let's fix the camera, guys. Guys, we gotta fix the cameras. Oh my gosh. Well, we'll hold it over here. You can see that for now. Sources. Why is it not? Why would it do that? Why would you do that? Webcam just stop working all of a sudden, randomly, for no reason. Like, honestly, for no reason. Thank you. Okay. So, welcome. All right, we already got some people tuning in. So, we got the FOMC coming up here in a bit. Hold on a second, I forgot to close the door. Okay, so anyways, we got FOMC coming up here. If I bring the charts up here, we can see since we left, there was a little bit of more extension. I mean, we left around here, so they went in and they made a new high, and then they really ran here for 8 ticks. I think that this was the point at which people were saying that there seems to be a consensus expectation that the Federal Reserve might announce some sort of quantitative easing. So, yeah, that's where we're at. And then it seems like after this point, maybe somebody took some profits or something, because it's kind of came back and has been pretty quiet since then. So, liquidity in the markets is already pulled and is quite light. There's a huge order up at 02. There's some big orders like way out there. Like, look, there's one at 31020. I mean, it's too hard to read. And there's 020. 13. Kind of hard to read into those too much because, you know, so much of the liquidity is just pulled anyways. So that price probably wouldn't stick out. So anyways, this statement could be incredibly volatile. So the issue that you have with a news release like this is that it's almost certain that they are going to lower interest rates, but it is the changing of the statement and then possibly what Powell says in the press conference later that is going to matter. And so you're going to have something that is quite likely to flop around quite a bit until it really knows where it's going to go. That is, unless, of course, they don't lower rates, and then the market will have the biggest temper tantrum ever. That 30% case where they don't raise interest rates, that's an ugly case. They would be so very, very upset. So very, very upset. All right, so anyways, are we just gonna chill for a few minutes? Oh, you know what? I don't have my sound set up correctly. Let's fix that. But you can't hear me. Yeah, you can hear me. We're good on that one. You just won't be hearing the clicks and stuff like that. Oh, cool. JavaScript has shift and pop functions, so that should help me with my queue. Donald Trump posting a video of the Air Force. Mute that. We don't need to hear it. How do I do that? Don't want it to be so loud. There we go. Ooh, it is pretty. I go look at it. It's I won't show it, but it's pretty cool looking video. Cool stuff. Alan Sutton. President Donald Trump is the best president to happen for America since Abraham Lincoln. President Lincoln saved America. President Trump, by his America First policies, is restoring it for the future. Okay. Okay. No clue who that is. I can see that r/politics is falling over itself in love with Elizabeth Warren's tax plans that take billions of dollars out of the stock market. So there was a little bit of, that was an interesting volume there. What's with that? There's definitely some increased activity here, despite all of the liquidity pulling and some big icebergs on both sides. So maybe two guys taking positions off, or maybe two guys putting positions on against each other. Or maybe, who knows? Trump says a military strike against Iran is an option in response to attack on Saudi oil facilities, but pushes back against Graham for decrying past restraint as weakness, saying it is too easy to get into Middle East wars. How did going into Iraq work out? Comment made by President Trump when asked about the politically struggling Netanyahu. Our relationship is with the state of Israel. In Bespoke pointing out that since Powell has been put into office, that traders tend to sell. They tend to sell the S&P 500 when he's talking. So there you go. They're gonna sell the E-mini, the E-mooney. I could maybe take a trade in the E-mini today, after the announcement comes out, of course. But I suspect that more QE, that should be good for markets, right? We can get QE, maybe minute 30 seconds. Uzi, this is gonna be fun. Yeah, it is. I could put an order. I could put a sim order in if you want. We could have fun with that. And stop limit. We could put one right there, and we could put one right there. But it's just too likely to go like, it'll be like there and then there. It'll be like, ha. That's what it's, so we can't. We can't. But I will try taking some sim trades when it gets going, all right? Especially if I see a stack, because those stacks have been working out pretty well. Well, we'll see. And especially if it starts moving up. So I'm worried about say I put one there at 24, okay? If they don't raise, then that could go down and you get filled there, and that would be the best effing trade ever. But what are the chances that they do everything and it's all good, but they decide to go down there first anyways, just to piss us off? You know what I mean? That's always what they tend to do. Well, it's not what they tend to do, but it's risky. It's risky. And I'm going to do this only with limit orders too. Because I don't want to get caught the wrong place. Okay, 5 seconds. Oh my. Okay, so they're going down first. The S&P 500 is selling quite hard. Fed lowers interest rates by 25 basis points as expected. Fed lowers rate on overnight reverse repos by 30. Okay, now we're going back up to the highs. So that's exactly what we were worried about. Oof. I thought about 20, but it went back up way too quick, didn't it? Come on. I don't be like that. Those fills would have never happened live. Yeah, I don't know. This whole thing, though, is certainly. Come on. For real? They just hate me today. Or maybe they really want to sell it. I don't know. Well, I tried being funky, but they're just going lower. Now I'm seeing this thing here. Well, that was a bad fill. Okay. Oops. That was not what I was supposed to do. What the heck? Okay, what happened? Oh, I know why. Okay. Fuck. Okay. That was nasty. So I meant to put a stop and then it decided to buy. Oops. No, without some mega slippage for sure. Yeah, well, all of those ones that I put in there that were put on the limit. So I think most of them actually would have been filled. Because none of them were with stop orders. Certainly wouldn't have taken it live, right? I mean, you can already see even if I come out of this positive, You can already see how in this kind of action it moves so far, you just... Are things choppy? I'd say they're choppy right now. So I don't really see... I don't really see anything out here as like some huge um, thing about the statement that they didn't like or that was wrong or anything like that. I'm not seeing anything like that. Um, they did go around quite a bit, but we're lower. They went into the open price and they're bouncing off of that. Some could be just random. I'm saying since my symmetry was a sell stop, there wouldn't have been filled by. Oh, right. You were talking about yourself. I got you. I got you. Well, there's some distribution going on at 21.5. And remember, 22 was where I initially they came down to, and I thought maybe you should have bought that one, and then they picked back up. Um, so maybe some resistance there. Let's take one off. Okay. Okay. Oh. Whoa. Whoa. What? What the fuck? I have never seen a sweep like that. I have never seen a sweep anything even remotely close to anything like that. Holy wow. Am I still only on one? Okay. Uh, Starting to build the deck next door. I can hear them working. Hmm. After a move like that, there's going to be a little bit of a pause. So that redeems ourselves a little bit, doesn't it? So a large algorithm has just come in and is starting to throw tons of huge orders about 8 to 10 ticks away. My birds are freaking out for some strange reason. They can probably hear the people next door working. Just pretend that there are traders on the trading floor trading this. Oh, touched VWAP and dropped cam S3. Oh, did I not turn on the text to speech? I did not. Let's turn that back
YouTube popularity matters. The birds are upset with the markets.
on. Right. He wants a fill and he's not getting it. That's his problem. That's his problem. He thinks his home is under threat. These builders out there, he's not happy about it. Okay, so somebody definitely in pushing it. There is a big order down at 17 now.
Twitch, Anarchy87, your mic's not on.
My mic is not on. How can you not? You don't hear me? Clearly somebody hears me because you guys are talking about my birds being upset, which means that you can hear the birds. So I think you're full of shit. But see, you probably thought, because there's probably not very many people watching on Twitch, so you probably thought, well, I'm the only person in here, so I can mess with him. But you see...
YouTube, hail and flourish, it's fine.
See, we have other people watching on YouTube, and they can hear me just fine. So your little attempt at trolling didn't do anything. No, they take 21 too. It's hard to know where these are going to stop, isn't it? Although I caught a pretty good one down there at the beginning with, where did I catch it from? Oh, I don't know where my original one was. Said on average I got 22.5, but I actually caught it much lower than that. But I started taking some profits. No mention of POMO or permanent repo ops. Watch GC explode overnight. Let's just look at the red line here. View original. Household spending has been rising at a strong price. Exports have weakened. What the hell? James Bullard, who preferred at this meeting to lower the target range for the federal funds rate to 1.25% to 1.75%, and Esther George and Eric S. Rosengren, who preferred to maintain the target range. Whoa, what? Well, I can see why they're maybe a little upset. They changed almost nothing about the statement. Almost nothing about the statement changed. There is nothing about the repos and all of this other QE and all of these other things that people are talking about. And there are still 2 members that think that we should keep it the same. Can you believe? Yeah, and meanwhile, banks can't even fund their operations. Yeah, I can see why they're upset. They're still being a little hawkish. They're still being a little hawkish. That's interesting. Okay, so bank stocks rise 0.2% after Fed decision reaching session high.
Twitch, NullMonkey0, XLF made a high on that.
Yeah. Oh, no monkey just pointing that out at the same time. So did my Goldman Sachs make it over 22.5? Or sorry, 225? 225? I'll pull it up on Yahoo Finance. So that'll do good enough job since I don't get equity data here. $214. No, it's not high enough. Until Goldman Sachs is above 230, let's say. Well, the E-mini, very, very upset. And Treasuries having a difficult time determining direction. Going back and forth here. It's telling me this is a buy. Okay. I'm going to be a little bit more risk adverse with this one.
YouTube, Lucas, sell the pullback S.
Sell the pullback. Yeah. I just don't know how to find a spot over there, man. I mean, how would you know that it was going to stop? That it was going to go back up to 3,004 and then turn there, huh? I can't tell. I can see a spot here. I'm a little concerned that they're going to come down and stop me out and then go up. But I definitely see a some overextension here. Hmm. 5-year ticked up, 10-year did not. Maybe some iceberging going on here. Unfortunate.
YouTube, Lucas, I've heard you were crushing it lately, Seth.
I've been doing pretty okay. Of course, if you count on the stuff in the FOMC today, then, you know, it doesn't look good. Hmm. So I've had some days where I've tried playing with multiple contracts and it hasn't worked out, but
Twitch, Null Monkey 0.
ooh, I've had a couple of good days in a row, and it's been like the past couple of months have been more profitable days. So now the problem that I'm having still seems to be more an issue of too many trades, too much in the way of commissions. So it's kind of like that. So is that where the
Twitch,
E-mini
Null Monkey
turns?
0. Are you still doing some sim?
Yeah, I'm still doing mostly sim. Some of them are live, but most of them are sim. See, I'm tempted to take one in the E-mini, but I don't feel confident enough about that one to
Twitch,
take
null
it
monkey
live.
0, that's wise.
Don't
Twitch, null
yeah,
monkey 0, until you feel more confident.
right. 'Cause the problem was that the reason I'm still doing it sim was because I knew that some market conditions were coming up that I hadn't watched this in yet, and so I didn't want to tempt it. But it's worked well. So, well, I just haven't been catching the spots, but I've also been taking more longs and shorts. So,
YouTube, Lucas, oh I see. For me it's just bad. Not that I'm losing, but I am not trading since I can't make sense of the chaotic VP. I miss the old setups. I am not understanding it as I used to.
well, the market is being weird, you know? So, this push down, I think, is uncalled for. Hmm. Not. I don't feel like I'm playing this super great.
Twitch, null monkey 0. Plot shows no more cuts this year.
Really? Hmm. I tell you what, if there's one thing you can say about the people running the Federal Reserve, they sure have um, what we say strength of. They stick to their guns. Because can you imagine seeing the situation this week and everything else, and still saying it doesn't affect our model, we're not going to do anything? I wouldn't be able to do that. I would not feel confident in anything that I had to be able to sit down and say that. Stakes too high, you know? Who is this guy, Jerome? Am I right? Hmm. Hmm. Okay. So we've got 5 ticks up here. And then they use the bell smiley. I'm so glad I added that. Kind of interesting the way that it's moved up. It's kind of just been slow and steady, tick by tick. Whereas the move down was kind of like, you know? This one's just one tick at a time, moving up. E-mini is kind of doing a, what do we call it? Consolidating triangle. Wow. Jay Powell and the Federal Reserve fail again. No guts, no sense, no vision. A terrible communicator, says Donald Trump. He's pissed. You know, he's like throwing chairs around the Oval Office. If I was president now. To be honest, listen, I mean, I don't feel like that his criticism of the Federal Reserve is necessarily fair or that he
Twitch,
should be doing
nullmonkey0
it.
at Speculatorceth. Does your YouTube video explain how Jigsaw shows the traded at bid versus ask?
I did talk about the current trades column in that video. Yeah, let me find the Federal Reserve here. Where is their channel? youtube.com/Federal Reserve. Press conference live. Ah, yes, peaceful music, guys. That's what we need. We need to just, it's okay. Everything's gonna be okay, guys. We can get through this. But if I was Donald Trump, okay, I wouldn't be criticizing the Fed, but I would probably be throwing some chairs around the Oval Office right now. Because, like, really? Two of them didn't want to raise. Can you believe that? They didn't want to raise? What? Well, maybe in the press conference he'll be a little bit more dovish. I would hope after seeing that, and their reaction to that he's going to be like, okay, I should go out and be nice. And get the nice Powell. Can we get the dovish Powell? I understand you got this model and everything, but I mean, banks can't find overnight funding. That's a problem, don't you think? I'm surprised. If I was president of the Federal Reserve, I'm never going to be president of the Federal Reserve, am I? But if I was president of the Federal Reserve, I would have put something in there about that. I would have put, the committee is monitoring ongoing developments with overnight funding and is considering a permanent repo facility to facilitate liquidity within the markets or something, That's all you got to do. We'll put in there and they would have been happy, right? You even have to say, we're going to do it. You just say, oh, well, we're watching it, yeah.
Twitch, nullmonkey0, here comes the man.
Here comes the man. Is he walking out? Darn. Fine. I want to get out because when he starts talking, it's not a good trade. I don't necessarily want to be in at that point. Come on. Thanks. Okay. Well, I tried my best, guys. Like, I really was. I think some of my sizing, this one right here, you see how that went to 6 at one point? That wasn't. I screwed up somehow on that. That one was where I misclicked, okay? But let's just call that maybe 4 ticks, okay? So other than that, though, I tried and I did everything that I could and I came out flat.
Good afternoon, everyone, and welcome. My colleagues at the Federal Reserve and I are dedicated to serving the American people. We do this by steadfastly pursuing the goals Congress has given us: maximum employment and stable prices.
That doesn't sound like a dovish
Jerome.
Jerome. That's like I'm hawkish and I'm trying to justify what I'm saying.
Today, we decided to lower interest rates.
Sell that shit.
Explain shortly, we took this step to help keep the U.S. economy strong in the face of some notable developments and to provide insurance against ongoing risks. The U.S. economy has continued to perform well. We are into the 11th year of this economic expansion, and the baseline outlook remains favorable. The economy grew at a 2.5% pace in the first half of the year. Household spending, supported by a strong job market, rising incomes, and solid consumer confidence, has been the key driver of growth. In contrast, business investment and exports have weakened amid falling manufacturing output. The main reasons appear to be slower growth abroad and trade policy developments, two sources of uncertainty that we've been monitoring all year. Since the middle of last year, the global growth outlook has weakened, notably in Europe and China.
All right.
Additionally, a number of geopolitical risks, including Brexit, remain unresolved. Trade policy tensions have waxed and waned, and elevated uncertainty is weighing on U.S. investment and exports. Our business contacts around the country have been telling us that uncertainty about trade policy has discouraged them from investing in their businesses. Business fixed investment posted a modest decline in the second quarter, and recent indicators point to continued softness. Even so, with household spending remaining on a solid footing and with supportive financial conditions, we expect the economy to continue to expand at a moderate rate. As seen from FOMC participants' most recent projections, the median expectation for real GDP growth remains near 2% this year and next, before edging down toward its estimated longer-run value. The job market remains strong. The unemployment rate has been near half-century lows for a year and a half, and job gains have remained solid in recent months. The pace of job gains has eased this year, but we had expected some slowing after last year's strong pace. Participation in the labor force by people in their prime working years has been increasing, and wages have been rising, particularly for lower-paying jobs.
Yay.
People who live and work in low- and middle-income communities tell us that many who have struggled to find work are now getting opportunities to add new and better chapters to their lives. This underscores for us the importance of sustaining the expansion so that the strong job market reaches more of those left behind. We expect the job market to remain strong. The median of participants' projections for the unemployment rate remains below 4% over the next several years. Inflation continues to run below our symmetric 2% objective. Over the 12 months through July, total PCE inflation was 1.4%, and core inflation, which excludes volatile food and energy prices, was 1.6%. We still expect inflation to rise to 2%. The median projection is 1.9% this year and 2% in 2021. However, inflation pressures clearly remain muted, and indicators of longer-term inflation expectations are at the lower end of their historical ranges. We're mindful that continued below-target inflation could lead to an unwelcome downward slide in longer-term inflation expectations. Overall, as we say in our post-meeting statement, we continue to see sustained expansion
They
of
just
economic
hate
activity,
me. They really
strong labor
hate
market
me.
conditions, and inflation near our symmetric 2% objective as most likely. While this has been our outlook for quite some time, our views about the path of interest rates that will best achieve these outcomes have changed significantly over the past year. As I mentioned, weakness in global growth and trade policy uncertainty have weighed on the economy and pose ongoing risks.
YouTube
These
Lucas, we don't
factors, in
Seth.
conjunction with muted
I know that you
inflation
guys don't.
pressures, have led us to
Not
shift
you.
our
It's everybody
views about
else that's
appropriate
not
monetary
watching.
policy over time toward a lower path for the federal funds rate, and this shift has supported the outlook. Of course, this is the role of monetary policy, to adjust interest rates to maintain a strong labor market and keep inflation near our 2% objective. Today's decision to lower the federal funds rate target by 0.25% to 1.75% to 2% is appropriate in light of the global developments I mentioned, as well as muted inflation pressures. Since our last meeting, we've seen additional signs of weakness abroad and a resurgence of trade policy tensions, including the imposition of additional tariffs. The Fed has no role in the formulation of trade policy, but we do take into account anything that could materially affect the economy relative to our employment
You don't
and
factor in trade policy.
The future course of monetary
Interesting that he
policy
specifically put that in his
depends on how the
speech.
economy evolves and what developments imply for the economic outlook and risks to the outlook.
Look at the top.
We've often said that policy is not on a preset course, and that is certainly the case today. As I've noted, the baseline economic outlook remains positive. The projections of appropriate policy show that participants generally anticipate only modest changes in the federal funds rate over the next couple of years. Of course, those views are merely forecasts, and as always, will evolve with the arrival of new information. Let me say a few words about our, about our monetary policy operations. Funding pressures in money markets were elevated this week, and the effective federal funds rate rose above the top of its target range yesterday. While these issues are important for market functioning and market participants, they have no implications for the economy or the stance of monetary policy. This upward pressure emerged as funds flowed from the private sector to the Treasury to meet corporate tax payments and settle purchases of Treasury securities. To counter these pressures, we conducted overnight repurchase operations yesterday and again today. These temporary operations were effective in relieving funding pressures, and we expect the federal funds rate to move back into the target range. In addition, as we've done in the past, we made a technical adjustment to the interest rate paid on required and excess reserve balances, setting it 20 basis points below the top of the target range for the federal funds rate. In a related action, we also adjusted the rate on the overnight.
That makes me incredibly uncomfortable. What are you going to do when it doesn't go back to where it goes?
We will continue to monitor market developments and will conduct operations as necessary to foster trading in the federal funds market at rates within the target range. Consistent with our decision earlier this year to continue to implement monetary policy in an ample reserves regime, we will, over time, provide a sufficient supply of reserves so that frequent operations are not required. To summarize, we are fully committed to pursuing our goals of maximum employment and stable prices. As the committee contemplates the future path of the target range for the federal funds rate, it will continue to monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion, with a strong labor market and inflation near its symmetric 2% objective. Thanks. I'll be happy to take your questions.
Okay.
Marty Krutzinger with the Associated Press.
Well,
Mr. Chairman, cut rates.
Market has to be upset about that, don't you think?
Adjustment. Is that still your view of what's happening?
So, as you can see from our policy statement and from the SEP, we see a favorable economic outlook with continued moderate growth, a strong labor market, and inflation near our 2% objective. And by the way, that that view is consistent with those of many other forecasters. As you can see, FOMC participants generally think
keyword in that sentence, many.
With modest adjustments to the federal funds rate. At the last press conference, I pointed to two episodes in, I guess, 1995 and 1998 as examples of such an approach which was successful in both of those instances. As our statement also highlights, though, there are risks to this positive outlook due particularly to weak global growth and trade developments. And if the economy does turn down, then a more extensive sequence of rate cuts could be appropriate. We don't see that. It's not what we expect. But we would certainly follow that path if it became appropriate. In other words, as we say in our statement, we will continue to monitor these developments closely and we will act as appropriate to help ensure that the expansion remains on track.
Rich Miller with Bloomberg. Taking the statement, your opening remarks, and the Sept, I'm just wondering what kind of message we should take from this.
Twitch null monkey 0. The Trump tweets LMAO.
Is it safe to say this FOMC still has an easing bias or not?
So the idea of having a bias is something that was a long time practice, and we don't actually have that practice anymore. So I can't really adopt it right here, but nonetheless, I'll respond to your question. So we made one decision today, and that decision was to lower the federal funds rate by a 1/4 percentage point. We believe that action is appropriate to promote our objectives, of course. We're going to be highly data dependent. As always, our decisions are going to depend on the implications of
So I've said this a million times before, but remember the fat girl analogy, right? Al, you gotta pretend like the E-mini is your wife, okay? And the rate, interest rate is like how much food she gets to eat. Okay, you don't come out. You get the big meeting where we talk about what we're going to eat for the week, and we say, "Honey, you're too fat. We can only eat salad this week." Would you say that to your wife? No, that would be dumb, even if she was like morbidly obese. Okay, no, that would be extremely insensitive. You would say, "No, honey, you look great. You look great, but you know what? If we're concerned, we can, cut back on a few things and stuff, but everything's going to be fine." See, that's what you got to say. Why won't Powell just say that? Just, just say the dovish thing. It doesn't even have to change the outlook. Just say something so that they don't sell every time that you're talking. You know?
Down and then up, I guess, or back up perhaps over the course of this intermeeting period. In any case, they've been quite volatile. So we do see
guy who sits next to me.
More heightened now.
And what has he got on there?
We're also going to be watching the U.S. data quite carefully, and we'll have to make an assessment.
Jeez.
Twitch null monkey 0. Low liquidity easy manipulation.
Thank you, Mr. Chairman. Nick Tamaros of the Wall Street Journal. I know you're trying to speak for the committee when you do these conferences, but the committee is clearly divided right now, at least about the outlook.
The committee is clearly divided.
Some people think you need to wait and see the labor market and the consumer crack or weaken further before acting more aggressively. And some people think that by the time that happens, you'll need to do even more aggressive action to arrest a downturn. Where do you stand on this?
Well, let me just say, on the general.
Did he really just to that question?
You're right. Sometimes and there have been many of those times in my now.
He almost said it like, well, I didn't expect to get a question like that. Really?
Relatively easy to reach.
I'm losing my mind over here, guys.
Disparate perspectives, and as I really do think that's nothing but helpful.
Sell the fuck out of that. There you go.
I see a benefit in having those diverse perspectives, really. So your question, though, is
your own view, because the data
wrong answer, Powell.
Especially when you have
wrong answer.
The markets obviously think these risks could materialize more than what.
Listen, I'm not a super genius or anything. I don't consider myself a super genius. I think I do some pretty dumb things sometimes. Sometimes I'm unhappy with the trades that I make, okay? But I can tell you, that one's a no-brainer. His reaction to that question was a disaster.
I think history teaches us that it's better to be proactive in adjusting policy. If you can.
Yes, there you go. Yes, that means you should reduce interest rates.
Applying that principle in a particular situation is where the challenge comes.
Yeah. Okay.
Where the committee, the bulk of the committee is going meeting by meeting, and I think the main takeaway is that this is a committee that has shifted its policy stance repeatedly, consistently through the course of the year.
If it so happens, if we could be so lucky.
The beginning of the year, we were looking at further rate increases, then we were patient, and then we cut once, then we cut again. And I think you've seen us being willing to move based on data, based on the evolving risk picture. And I have no reason to think that will change. I think, but it will continue to be data dependent, and data includes the evolving risk picture. That's where I am, and that's where I think the bulk of the committee is.
Just somebody end it. Where are the handlers?
Steve Leisman, CNBC.
You come out here. Just take him off the stage, please.
I'm concerned about how the Federal Reserve operated through the recent liquidity crunch in markets. We talked to many traders who said the tax date payment was known well in advance. There were several reports of people pointing to September as a potential crunch time. You closed Monday at the top end of the Fed funds rate. Tuesday came along and there wasn't an operation until 9 o'clock, and no announcement of a second operation until 4 o'clock in the afternoon. Was the Fed listening to markets well ahead of time, going back a year when there were blowouts in the overnight rate at year end and the turn of the year? Are you concerned about how, for example, the New York Fed
YouTube, Romeo Dutu. Try the easiest to use cryptocurrency in the world, WebDollar.
Never heard of it, don't care.
Has more invested in
Sorry, dude.
Following the,
We're focused on the Federal Reserve right now.
Of course, we were well aware of the tax.
I appreciate your comment, though.
The settlement of the large bond purchases.
Maybe you show your
We were
cryptocurrency during
waiting for that, but we did
less
expect
opportune
the
time.
response to that was
By
stronger
opportune, I
than
mean like
expected
when the
by
markets aren't doing anything.
It surprised market participants a lot too. People were writing about this and publishing stories about it weeks ago. It wasn't a surprise, but
Might go down again.
It was a stronger response certainly than we expected. So no, I'm not concerned about that. To answer your question, I can go on a little bit about how we're looking at that. Why don't I do that? So, as I mentioned, we don't see this as having any implications for the broader economy or for the economic outlook, nor for our ability to control rates. The strains in the money markets reflect forces that we saw coming, and they just had a bigger effect than I think most folks anticipated. Strong demand for cash to purchase treasuries and pay corporate taxes. We took appropriate actions to address those pressures to keep the Fed funds rate.
YouTube, Lucas, infuriating.
Right.
Another episode of pressures in money markets.
Well, you know what's funny is that I took all of those trades and I had some really bad losers in there, and I came out plus 16.
As you will all recall.
Anyways.
Over a period of years, actually, the committee announced the decision to
Don't do what I just did, kids.
Reserves regime.
I got.
And we've been operating
that was Sim.
For a full decade.
That's all I'm saying.
To implement our rate decisions.
All of those fills were accurate from what I could see.
Our administered rates, the IOER
but
and RRP
don't
rates
do that.
to keep the Fed fund rates in the target range. It's designed specifically so that we do not expect to be conducting frequent open market operations for that purpose. So going forward, we're going to be very closely monitoring market developments and assessing their implications for the appropriate level of reserves. And we're going to be assessing, the question of when it will be appropriate to resume the organic growth of our balance sheet. And I'm sure we'll be revisiting that question during this intermeeting period. And certainly.
Okay, well, they kind of liked that. And the big bits showed up there. I'm glad I got out where I did. I was really... When I took that trade, I was a little like, why am I taking this off so early? Why don't I let it sit a little bit more? But I did the right thing.
As you know, we've invested lots of time talking to many of the large holders of reserves to assess what they say is their demand for reserves. We tried to assess what that is. We've tried to combine all that together. We put it out so the public can react to it. But yes, there's real uncertainty, and it is certainly possible that we will need to resume the organic growth of the balance sheet earlier than we thought. That's always been a possibility, and it certainly is now. Again, we'll be looking at this carefully in coming days and
okay.
At the next meeting.
Okay. They'll be considering it, and that why didn't he say that should have been in his opening statement.
Earlier this year, or actually in September, the Governor's Board put out a research paper trying to quantify trade uncertainty. And it suggested that it could drag through the business investment channel on growth as much as a percentage point over the course of the next year. How much confidence do you have in the Fed's ability to estimate the real effects of trade uncertainty. And if you have confidence in that paper, it would seem to suggest a sort of a more aggressively dovish path than the one that you've chosen.
Buy some SPOOs? You would think so?
Provide a little context. Fed economists do research all the time.
Tell you what.
It's generally a very high quality.
Just for you, Peter.
It's their research. It's not an official finding of the Federal Reserve Board or the Federal Reserve System. It's just, by the way, they put it out for public review that you can see their econometrics. You can see all of it. Their whole work is exposed to critique by the whole profession. So it's a great tradition that we have. And what this particular piece of work did is it went after measuring trade policy uncertainty through a couple of channels, including concerning tariffs, also concerning the threat of more tariffs, and it looked deeply at the data to try to assess the effects on output. And while I would say, directly answering your question, there's real uncertainty around these effects. It's a $22 trillion economy. To try to isolate the effects of certain things is very challenging, but we do the best we can. So, and this piece of research
Just in
found
case
significant
something
effects.
crazy
That's
happens.
frankly consistent with a number of other research projects that economists have undertaken. It's also consistent with what we've been hearing in the Beige Book. So, I mean, I think if you take a step back from that, we do feel that trade uncertainty is having an effect. You see it in weak business investment, weak exports. Hard to quantify it precisely, though.
Hi, Howard Schneider with Reuters. I was struck by the sort of anchored median federal funds rate here through 2020. And that in comparison to the fact that you now have sort of three very discrete groups of opinions.
This could just be like a pullback. I don't know if like we just had a full-on reversal or what.
Those opinions have become sort of firmer in their conviction, and that it's going to take some sort of real material change in the outlook now for that to move in either direction.
And you're asking specifically about 2020?
Well, the fact that the Fed's funds rate is now seen as not moving through 2020 suggests to me that these opinions are pretty well anchored right now in those groups. You know,
honestly, I think it's hard to have hardened expectations about where rate policy is going to be a year from now. I think the closer you get to the current day, the more confidence you can have. But even then, knowing what the data will say and the way geopolitical events and other events are going to evolve in the next 90 days and the implications of that for the economy, I would say there's a lot of uncertainty around that.
Fair enough.
Particularly if you look at 2020, I think the use of this is individual participants write down their forecasts. It should give you a sense of how people are thinking about the likely path of the economy and the appropriate path for monetary policy in that individual person's thinking. And I think that's a good thing to know. I think I'd be very reluctant to look at it as hardened views or a prediction, really.
But just to follow, if I could, there were a number of arguments in July around the reason for cutting rates. Have any of those gotten substantially weaker or changed around the table?
No, I think if you look at the U.S. economy.
Twitch, NullMonkey0. Do you mind scrolling to the lot on the S so I can see it for a sec PLZ?
Right there?
Spending at a healthy clip. I'd say business fixed investment and
29.80.75. They went offer at 28.50, 29.80.50, but they didn't hit it.
Generally, that is the same. I think if you look at the global economy, I think has weakened further in the EU and China, and I think trade policy developments have been a big mover of markets and of sentiment during that intermediate period. So that's why I think
Twitch, NullMonkey0. Nice, thanks.
Period. And different people around the table have different perspectives, as you obviously know.
This is a good run that we caught.
Hi, Chair Powell. Gina Smilik with the New York Times. I'm just curious on your balance sheet point. You talked about the committee thinking about resuming organic growth, over time. I guess the question is, if you have shrunk your balance sheet maybe just a little bit too small to the point that reserves are too scarce to get through sort of these unusual periods, is organic growth in the balance sheet enough to get back to a point of ample reserves that can get us through those
I
tough
just
times?
really love
Or do we
these
need to
these
be a little
young
bit above that? Is that a
reporters that
possibility the committee would consider?
work so hard to
Yeah, I
ask
think,
good
I
questions and
think
smart
the
questions and
view of,
understand what's going on.
political possibility. I think for the foreseeable future, we're going to be looking at, if needed, doing the sorts of things that we did the last
Twitch,
2 days.
null monkey 0, lol.
I mean, I appreciate a good-looking reporter. She was cute, but mostly so hot.
As we learn more,
But mostly, she asked a good question, right? We've had some people
how
come
much
in here
this
and
really
ask
has to
dumb
do
questions.
with the level of reserves. And I
Some
think
people
we're
ask
quite
dumb
aware
questions.
Victoria Guida with Politico. Another money market question.
YouTube,
You know,
Luis
banks have been
Alarid, we should
pointing
send
to
you.
liquidity rules
I
as
don't
one
know
of
if
the
I would be able to
reasons
ask a
for
super
volatility we've
smart
seen in
question.
repo markets.
I would just
And
be sitting there going like,
those capital
what?
rules as
I'd be
well.
doing what I'm doing
Are
here.
you all looking at
What?
whether you know, some tweaks to the liquidity coverage ratio might help? And also, what is the status
This
of the
is a
investment
little
grade
interesting.
ratio? Are you all still planning on putting that out soon?
You know, so I think if we concluded that
Twitch,
we
null
needed
monkey 0, Seth.
to
Yes, Mr. J, can you give me the news before it happens?
Right.
The LCR, we'd probably raise the level of reserves rather than lower the LCR. I mean, it's not impossible that we would.
I mean, if I was a reporter, okay, and I asked him the question that kid asked him earlier,
On the other hand, it might be
the young guy, and he said, I would be having a brain aneurysm. Like, that's you're surprised by that question? He asked like the most duh question there was. Well, that's an interesting question. I didn't expect anybody to ask why, we're having funding problems in the markets, and that people have other opinions on the outlook, and that the FOMC is extremely divided. Didn't expect anybody to ask that.
in times of stress rather than pull back from the markets.
What an idiot.
As a general rule.
I don't know, man.
About a month ago, Edward
I shouldn't call the chairman of the Federal Reserve an idiot. I greatly respect the man, but he screwed up there.
Have you figured out how to incorporate trade uncertainty and this level of trade uncertainty into monetary policy going forward? You've talked about uncertainty many times today.
So my point really was that to start that trade policy.
Twitch, null monkey 0, he's taking us to 4000s.
Oh, you think so, huh?
So why are we talking about it?
Well, you know what? I'll settle for 3,000 right now. We'll get back to 3,000 again. By the end of the day, I'd be happy.
Take into consideration. And our discussion.
If we get back to 3,000, we can say, it's okay, you slipped up, but we're okay.
So I pointed out in recent remarks that the thing we can't address really is what businesses would like, which is a settled roadmap for international trade. We can't do that. We don't have that tool. But we do have a very powerful tool which can counteract weakness to some extent by supporting demand through sound monetary policy. And we think our policy tools support economic activity through fairly well understood channels. By reducing interest burden and encouraging consumer purchase of durables, of homes, and other interest-sensitive items, by creating broadly more accommodative financial conditions, which supports spending and also investment by businesses, and also by boosting household and business confidence. So, I don't want to be hurt to say that our tools don't have an effect. They do, but I was making the point that there is a piece of this that we really can't. Well, I think, yeah. I mean, it's a challenge. There's no simple bottom line answer where I can say, yes, I've got it for you here. But what it amounts to is this. What you see is probably the kind of volatility that's typical of an important, complex, ongoing negotiation. And I think what we need to do is to try to look through the volatility and react to the underlying forces, the underlying things that are happening that are relevant to our mandate. We have nothing to do with setting trade policy or
right.
Trade agreements. We're supposed to be reacting.
I don't understand how you can separate those.
Support maximum employment and stable prices. So we need to look through what's a pretty volatile situation. So that means not overreacting quickly. It means not underreacting.
Sorry, Mr. Powell, but
That's really what
what happens with the trade war has a direct impact on price stability and unemployment.
is positive.
And if you can do something to assist in the trade negotiations, within reason, I think that the Federal Reserve has a responsibility to do that. I'm starting to come around to that view, at least. Okay, now he must have said something else, because it's starting to get a little furious over there in the Treasuries.
From Bloomberg Radio and Television. Fed funds futures trading since the statement was released shows that investors still think that another rate cut is coming this year. On their behalf, let me ask, what is going to guide Fed policy to either pull them towards where the dot plot suggests no more moves this year, or keep them in place? Are you reacting to data now? Are you reacting to your gut feeling about what trade tweets might mean? Should they just
I understand why they were reacting. So I think that I'm probably delayed by like 5 seconds. So.
Right. So what we are looking for through all of the data, all the events that are going on around the world, we'll be looking at the evolving geopolitical events. We'll be looking at global growth. We'll be looking at trade policy uncertainty. Most importantly, we'll be looking at the performance of the U.S. economy. We'll be looking for things that are affecting the outlook for the U.S. economy, particularly the outlook as it relates to maximum employment and stable prices. So all of those things in principle can affect the achievement of our goals. It's an unusual situation because
He's such an egghead, guys.
The largest part of it, the consumer.
I like him.
Is in
I like him, but
the manufacturing part.
He could do so much better of a job.
You see an economy that I think generally forecasts show growth similar to our own forecasts, coming at about 2%, which is a good solid year. So the difference here is we have significant, really, risks to that outlook from not just the geopolitical events, but also from slowing global growth and trade policy uncertainty. So we'll be looking at all of that, and also financial market conditions and how they are affecting the outlook.
Well, that I wasn't too happy.
It's a challenging time, I admit it, but we really have to be open to
Twitch, NullMonkey0, he's too smart for the commoners, lol.
We're going to be making decisions meeting by meeting.
He's too smart for his own good.
We'll try to be as transparent as we can as we go.
Hi, Chairman Powell. Donna Borak with CNN. With the rate cut today and potentially another modest adjustment coming down the road, do you worry about lessening the Fed's firepower should there be a recession? And is there any scenario in which you would envision rates drifting lower into negative territory? And are there any other tools that you could use before having to go there?
So one thing I want to point out here, you can tell that the market is reacting to what he's saying, in part because of how much it comes back after he says it. People are taking trades, like traders like me are sitting there and they hear that and they go, well, I didn't like what he just said, and they sell it.
There's a fair amount of research.
That's totally what they're doing. And then they get their trade and they get out. They're not going, well, I don't like what he just said. That's it for me. I think this is a bad press conference. I sell it and then leave their desk. They're not doing that. They're taking short trades off of it. Because after it goes, it retraces 10 ticks.
Whether that is the case. If, in fact, the economy weakens more, then we're prepared to be aggressive. And we're
prepared to be aggressive. Thank you.
To be appropriate. You mentioned negative interest rates. So negative interest rates is something that we looked at during the financial crisis and chose not to do. We chose to, after we got to the effective lower bound, we chose to do a lot of aggressive forward guidance and also large-scale asset purchases. And those were the two unconventional monetary policy tools that we used extensively. We feel that they worked fairly well. We did not use negative rates. And I think if we were to find ourselves at some future date, again at the effective lower bound, again, not something we are expecting, then I think we would look at using large-scale asset purchases and forward guidance. I do not think we'd be looking at using negative rates. I just don't
Cool.
think those will be.
I like
or at
that.
least
I
by the
like
way,
that
we
because
are
I don't
in the
want
middle of a
negative
monetary
rates
policy
over here.
review where
But
we're looking through all of these questions about the longer run framework, the strategy, tools, and communications, and we expect that to be completed sometime around the middle of next year.
Don Lee with the LA Times. How much, and can you talk about the mechanism in which the 2 rate cuts will affect the real economy, and how much, to what extent will it offset the negative effects of the trade uncertainty and tensions?
So in terms of how our rate cuts will affect the real economy, first we think monetary policy works with as Friedman said, long and variable lags. So I think the real effects will be felt over time.
Yeah.
But you know, we think that lower interest rates will reduce interest burden for borrowers, so that interest-sensitive things like housing and durable goods and other things like that, cars, it supports purchases of those. Just, again, broadly more accommodative financial conditions, higher asset prices. That's the models and the data show that that's another powerful channel. I also think there's a confidence channel. You see household and business confidence turn up when financial conditions become more accommodative. So I think through all of those channels, monetary policy works. It isn't, precisely the right tool for every single possible negative thing that can happen to the economy, but nonetheless, it broadly works. And we're going to use the tool we have, and if it comes to it, we'll use all of our tools. So that's how we think it works, and how we think it's working. It's very hard to say. It's tough to say. We'll use our tools to offset negative. That's really the job of monetary policy, is to the extent it can to offset things that drive us away from maximum employment and stable prices.
Nancy Marshall-Genzer with Marketplace. Chair Powell, are you worried that the low interest rates are adding to or could create a bubble of consumer and corporate debt that could make it more difficult for especially consumers to recover from the next recession or survive the next recession?
So if you actually look at households, households are in very strong shape. They're less levered. They've got less debt. They've got more income relative to their interest.
Congratulations, households. Less debt. That's something to be proud of.
Much better shape than they were in before the financial crisis. So the
Give
household
yourselves a
sector,
hand.
as a sort of aggregate matter, is in very good shape. That doesn't mean that every single person in the household sector is in good shape, but overall, it's really not a concern.
See, he has to be like so careful. Like I get the impression that he's just terrified out of his mind up there of saying something wrong.
GDP in the business sector is at a high level. However, so is the size of the business sector. So actually, the business sector itself is not materially higher leverage than it was. Nonetheless, there are a lot of highly levered companies, and that's the kind of thing that happens during a long cycle when there aren't downturns. For now into our 11th year,
good break right there.
You do get that kind of phenomenon in a long cycle. So that's something we're monitoring, and I think our view still is that's a real issue. But what it really represents is a potential amplifier of a macroeconomic downturn. It does not have the makings of anything that would undermine the workings of the financial system, for example, or itself create a shock that would turn the economy down. It's more of an amplifier. We take it very seriously, though, and we're monitoring it carefully. We're actually looking.
That's an interesting. I would like to look more at that. Why does he think that it doesn't really cause problems, but it's more of an amplifier?
These loans are held all around the world. So
it only becomes a problem when things are going down.
We're trying to keep on top of it.
Thank you, Chairman Powell. Greg Grob from MarketWatch. I'm kind of hearing two things from you. You're saying that the economy is doing well, but there's this sense with people that the economy is actually starting to slow now. and
The press is trying to do everything. They're like, listen, Powell, there's this one little simple thing that you just have to say to make the markets happy. And they're giving him like 20 chances to say it.
Next year, do you think GDP growth is going to hold steady and the unemployment rate? Could you talk about just how do you see the economy evolving over the next year?
You know, so I think, and my colleagues and I think all think, that the most likely case is for continued moderate growth, continued strong labor market, and inflation moving back up to 2%. And I think that's, by the way, widely shared among forecasters. You know, the issue is more the risks to that. You have downside risks here, and we've talked about them. It's that global growth will have an effect on U.S. growth over time, less so than for many other economies, but still, there's a sector of our economy that's exposed to that. Trade policy uncertainty also has apparently has an effect. And you can see some weakness in the U.S. economy because of all that. But nonetheless, so the job of monetary policy is to adjust to both to insurance.
So there's a little bit of volume going through here in the ES, and they broke out to the top side.
That we do see. So as I mentioned, we don't see a recession. We're not forecasting a recession, but we are adjusting monetary policy in a more accommodative direction to try to support what is, in fact, a favorable outlook.
And the inverted yield curve that we hear is the bond market signaling recession. What do you is that so that's not that signal is not pertinent to you, or where do you?
No, we do. So we monitor the yield curve carefully, along with
Hmm.
a wide range of financial conditions. We don't. It's not. There's no one thing that is dispositive among all financial conditions. The yield curve is something that we follow carefully. And again,
It's so funny to me the things that he seems to be really cautious about saying, because to me it's like, well, everybody understands. We all understand that you look at a wide array of things. But he must be trying to speak to people that don't really understand the Federal Reserve, I guess. I don't think the Federal Reserve sees this press conference as that the primary audience is
Twitch,
traders.
null monkey 0, yay.
I don't think he thinks the primary audience is traders.
Twitch, null monkey 0, they are journalists, not traders.
Yeah. I think he thinks the primary audience is journalists and people at home that are going to hear about what he said on 5 o'clock news.
Negative yielding and very low yielding sovereign debt around the world.
So he's always cautious about these really dumb things, but then he'll say the things that the traders hate. That he should be more worried about pissing the traders off, I think. But because guess what?
YouTube,
hold
Luis
on.
Alarid, the S has been moving up since he started speaking.
Well, it took a big dive at the beginning here, and now since he's been stocking, they've been able to catch a good bit.
You know, from my perspective, you watch it carefully, and
Now, Treasuries is a different story.
If the yield curve is inverted.
It'll be interesting if the Treasuries retrace this and go back to their open prices, like at 129.18 in the 10-year, for instance. That would be hilarious to me.
Twitch, null monkey 0, do you ever trade stocks or only FUTs?
I don't day trade stocks, but I do from time to time make some moves in stocks.
Interest rate cuts go. You referred to this as a mid-cycle.
Mostly
Twitch, null monkey 0, long term.
Long term. I like to change my allocation in my 401k. I have some Goldman stock I own that they gave me that I monitor closely.
So, under what circumstances would you say, what, I think we've cut enough.
But I don't play the what's the best stock game, who's the big mover today, that sort of a thing.
Have you felt a need to take any steps to boost employee morale at a time when the president is
Twitch, null monkey 0, my Goldman dog.
Right.
I'd love to be able to argue
right.
a simple, straightforward.
I mean, I like they're going into consumer banking, and I like this. I think that there could be a lot of growth ahead of them with this, because I think that they could be really good at it. But they got to get above 225. We can get above $225, $230.
At sort of things that are happening in the economy, I think I personally see
Twitch,
high
null
value
monkey 0 would be cool if they did normal investors.
Not
really
just
are
rich. Yeah.
this positive
Well,
economy
I mean,
in communities.
they're doing the Apple credit card right now, right? They're the financiers behind that,
So
and they're trying to expand it.
We're watching carefully, and there will come a time, I suspect, when we think we've done enough. But there may also come a time when the economy worsens, and we would then have to cut more aggressively. We don't know. We're going to be watching things carefully, the incoming data and the evolving situation, and that's what's going to guide guide us on that path. In terms of the morale of the institution, I would say it's very high.
It's very high.
We feel like we're
Good for you guys.
doing the best job we can serving the American people.
Hi, Chairman. Hannah Lang with American Banker. It's been reported that the CFPB is investigating Bank of America for opening unauthorized accounts. I'm wondering if the Fed is also investigating this, and given the pending order against Wells Fargo, if you're concerned that these banks are too big to manage.
You know, so I saw the headline like this morning during all of the preparation and everything, and this morning's meeting. I really don't have anything for you on that. I will say about Wells Fargo that you know, there were quite wide breakdowns in risk management, which resulted in you know, mistreatment of consumers that we know was quite harmful to the consumers and to the image of the institution. I have no idea whether that's what happened at Bank of America. I really don't know standing here today.
Steve Beckner, filing for NPR, freelance. The Fed and your fellow central banks have been
I could just get a few more ticks.
exploring the far
No.
reaches of what's possible for monetary policy, even going so far as to make rates negative in some cases with mixed results. Meanwhile, fiscal and regulatory, not to mention trade policy, are pursuing their own separate courses. As you and your colleagues do this monetary policy framework review, do you ever consider the limitations of monetary policy? Should you be more explicit about what monetary policy can and cannot do in this environment?
You know, we try to be clear about that, but really I think our job is to use our tools as best we can to achieve, you know, to do the jobs that Congress has assigned us, which is achieve maximum employment and stable prices. That's our real job. In terms of giving the fiscal authorities,
I'm wondering now,
or the ones who created us, advice about how to do their job, you know, we keep that at a high level, I think. And at a high level, yes, I would say, and I've said before, that it's really fiscal policy that is more powerful and that has much more to do.
Twitch, null monkey 0, volatility dumping.
Do those things.
I should have held it. Look, I would have gone up to my price.
Rate of the United States by improving productivity and labor.
$10 more dollars.
The skills and aptitudes of workers. All of that comes from the private sector, but also from more the kinds of things that can be done with fiscal policy.
They were just waiting for me to get out, and then like, here, Seth, we're going to make you go just that much farther, just to make you look foolish.
It's not a function of monetary policy. It's a function of other things. So I try to be clear about that, and but ultimately, fiscal authorities will do what they seem appropriate.
Twitch, null monkey 0.
What do you got here, buddy?
Samir Hussein, BBC News. Mr. Trump has been a very vocal critic of you and your colleagues, recently calling you boneheads.
Oh, yes, I've seen that. Yes.
A terrible communicator.
He's sold?
How do you respond to these criticisms and any regrets to have this many press conferences?
I don't. I'm not going to change my practice here today of not responding to comments or addressing comments.
Twitch, null monkey 0, bump EET.
I will just say that I continue to believe that the independence of the Federal Reserve from direct political control has served the public well over time, and I assure you that my colleagues and I will continue to conduct monetary policy without regard to political considerations. We're going to use our best judgment based on facts, evidence, and objective analysis in pursuing our goals, and that's what I have to say on it.
Hi, Chairman Powell. Brian Chung with Yahoo Finance. Thanks for taking my question. As we saw with falling yields, at least up until the beginning of this month, there's been a lot of demand for U.S. Treasuries, and even that was partly maybe to blame for the liquidity crunch in repo markets that we saw this week. I mean, does the Fed have concerns over the impact
YouTube, Anthony Monroe, the boat is sinking deeper and deeper.
with Treasury
Which boat are you talking about? Are you talking about the Bitcoins? Has the Bitcoins reacted during this?
Not really, no. That's
something fun. No, they're just kind of doing their thing.
Well, there's how much to spend.
Shouldn't have salt, guys.
And there's how to finance it, and none of that really.
They go up to 3,000 and above. I'm gonna be so salty.
Now that doesn't stop.
I could have paid $100. Why was I so dumb?
That we think it's important that the U.S. Fiscal picture return to a sustainable footing. And, right now it's not. That's been the case for a long time. And that's something we will have to address. And a good time to do it is when the economy is strong. So we limit ourselves to high-level statements like that.
Hi, Heather.
YouTube popularity matters. Bitcoin. Is this 2017?
In your view, is there any risk to the United States having
Come on, we got to talk about Bitcoin at least once a day, right? I need to stop talking about it so that you guys are forced to go to my Patreon to see my opinion on Bitcoin.
I guess I would say it this way. It's global capital markets are highly integrated, and our rates are long rates are definitely being pulled down.
YouTube, Anthony Monroe, lol.
That are abroad, and the way I would characterize it is this: that low rates abroad are a symbol, or a sign rather.
I'm surprised that they're not reacting more than they have, but Bitcoin has always been kind of slow on this. But I mean, what happened today in the markets, if this holds at all, is not good for Bitcoin.
Ideas about how to break out of that low equilibrium.
Not good.
In a world where
because you don't. Part of the trade is the hedge against the Federal Reserve, and the Federal Reserve is being tight. So that trade doesn't make sense.
Because of that, and so I think we put all of that.
And can you imagine if today we end up being significantly lower?
How the international sector interfaces with the.
I mean, if we close down here near these lows or lower,
setting our interest rate policy,
then yeah, it's a pretty ugly inflection in the trend. Well, I will show you. I will explain. Oh, did they just cut it? Yep, he just walked off. See, he gets so quickly. He was ready to get out of there. It's not like me. Like me, when I'm done, I'm like, but it's, so much fun. And I just don't want to step away. I don't want to look away. You guys are so great. But you know what? I really do have to go. No. That's not Powell. He's like, oh, thank God it's been an hour. Please get me out of here. No, they have such good music at the Federal Reserve. I appreciate it. Okay. So anyways, if we come over to the chart here. Why is it? Oh, because I don't have the scenes. There we go. Charts. Okay. So if we look at it on a daily basis, what does that look like? We call that? Wait, let me.
YouTube, popularity matters. I don't have to go home to my wife, but I do have to get out of here.
Oh, that's unfortunate. Well, thank you. Thank you for watching. This thing right here. What does that look like to you? Because you know what I call it? I call it a bull trap. Right? Oh, it's over. Everybody, we can buy again. Oh, fuck. Right? That's what that does. right? Now, it's a pattern, and I have absolutely no probability on it, and it's probably just nonsense.
YouTube, Anthony Monroe, I hope so.
I hope so. But they're still, I still think it matters. There's a good chance it's going to go. That's probably my father. Hold on a second. So anyways, if that really is what ends up happening in the treasuries is something like that, then that's really bad for Bitcoin, because that's one of their major boosters has been hedging against global uncertainty. Now all of the big guys that were maybe supposedly getting involved, no reason to. So it's not good for Bitcoin, and they're still like dangerously close to this 10K level. And anyways, well, guys, had fun. We made some fake money. We made some real money. I did take that great E-mini trade live.
Twitch, NullMonkey0, GG.
You can see there I got that ones. GG, right? It was funny because Peter was like, buy the E-mini, it looks like it's turning, and I looked at it and I was like, I see the same thing, I'm gonna take it. That was cool. So good stuff. Well, anyways, I've got to go and take care of my car, so I will see you guys tomorrow. In the meantime, stay profitable, friends.